Welcome to the Gamma Brief. I'm your host, Alex. If you're new here, the Gamma Brief is an experiment. I'm using a layered generative AI pipeline to reliably capture market data, economic events, and structural mechanics, and then turn all of that into accurate, actionable briefings every day. Be sure to check out gexlog.com/dashboard as well to check out the daily market snapshot, as well for the daily market snapshot and evening recap. New features are being added based on your feedback, and I'll be showing off these new features in an upcoming video. Now let's get into the daily brief. As a reminder, this is market intelligence, not financial advice. April 13th, 2026, 7 a.m. Eastern, ES futures are at 6,812.5. A rising VIX is signaling structural fragility right at our lower bound. Friday's high volatility forecast was a miss. The market stayed range bound and respected the 6,800 put wall to the tick. If the floor breaks today, dealer support vanishes and volume expands. The market is operating in a positive gamma regime backed by net GEX magnitude of positive $5.6 billion. The GEX flip level sits at 6,910, a confirmed 93.1 points above the current price. Under positive gamma, dealers are structurally long options. They will mechanically sell into rallies and buy into dips, dampening intraday volatility and capping directional runs. However, there is a divergence we must flag. VIX is rising notably overnight to 21.26 despite muted futures, indicating that downside hedging demand is increasing beneath the surface. Defining the critical pivots, the put wall sits at 6,800 and the call wall sits at 7,000. ES futures are heavily pinned toward the put wall, currently sitting roughly 12 points above it. SPX closed at 6,817, placing it 17 points above the wall. If the gap holds, your buffer is 12 points. If the gap fades, such as ES recovers towards 6,817, the buffer grows to 17 points. Do not view this proximity as comfortable. The 91-point expected move reaches down to 6,721, mathematically projecting a test and potential breach of the 6,800 put wall today. By contrast, the call wall is completely out of play, residing roughly 188 points above ES and 183 points above the SPX close. Overnight, the macro narrative was dominated by the collapse of US-Iran nuclear talks in Islamabad. This failure triggered an immediate risk-off reaction, stoking fears of an oil supply shock and driving treasury yields and the dollar higher. Secondarily, Viktor Orban conceded defeat in Hungary, driving slight EU sentiment shifts but serving as a non-factor for US equities. Finally, the OPEC monthly report was released pre-market, reinforcing the energy sector focus, while Goldman Sachs earnings officially kick off the financial reporting cycle. On the risk radar, the primary threat is a breakdown of the 6,800 floor in response to geopolitical escalations. With calendar risk at a low 2 out of 5, the true danger lies in the asymmetric risk of a put wall failure in an elevated VIX environment. Structurally, the positive gamma regime favors income generation, but only if the put wall holds. The primary plan triggers if we hold above 6,800. Positive gamma dampens directional moves, favoring iron condors using the 6,800 put wall as the lower anchor and 7,000 as the upper anchor to target premium decay. The alternative plan triggers on a confirmed break below 6,800. This removes put wall support and exposes S1 at 6,779 and S2 at 6,733. In this scenario, deploy a bear put debit spread targeting 6,733. Do not attempt to sell premium if 6,800 fails. The bottom line, our bias is range bound pending the defense of the 6,800 put wall. The definitive trigger for the day is a sustained break or hold of the 6,800. The regime is range bound, but volume is elevated. Size down, let it come to you. Level set, bias defined, good luck out there. If you want to see more of the Gamma Brief in your daily rotation, hit that subscribe button and don't forget to like. Standard disclaimers apply. This is market intelligence, not financial advice. Derivatives are high risk. Always trade your own plan.